The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. As global markets face mounting uncertainty from geopolitical tensions to fears of financial system instability, the world's ultra-wealthy are quietly moving their assets out of traditional systems and into something far more tangible, physical gold. And increasingly, they're sending it to Singapore. Just minutes from Changi Airport sits a striking 6-story black and onyx building home to the Reserve, a high-security vault that now stores an estimated $1.5 billion in gold and silver. Inside, private vaults and floor-to-ceiling safe deposit boxes stretch 3 stories high, reflecting a growing trend. More high-net-worth individuals are looking for stability, control, and trusted jurisdictions outside of their home countries. Singapore is being hailed as the Switzerland of Asia, but what's driving the shift? Why are physical assets back in focus, and why now? Well, to find out more, joining me in the studio is Gregor Gregersen, who's the founder of Silver Bullion Group. Gregor, welcome back to the show.
Thank you for having me.
Thank you so much for joining us. Well, Gregor, from the start of the year to April, the precious metals repository in Singapore has received an 88% increase in orders to store gold and silver in the vault from the same period in 2024. Why is Singapore emerging as a preferred offshore destination for storing gold among the ultra-rich? What factors are driving the shift right now?
Well, our clients are largely concerned about 3 things, I would say. There is unsustainable debts that they have in their home countries, whether it's the United States or Europe. You have increasing social instability within their countries, and then you have the geopolitical factors. Mm-hmm. And these reinforce each other. And when you put them together, there is just this increased want to find a safe haven place in an apolitical store of value, which is physical gold, as a long-term sort of wealth protection. And that's what's driving much of the increase.
Okay. But why is storing physical gold in a jurisdiction like Singapore with trusted parties becoming such a dominant trend among global investors?
Well, when people buy physicals, they're looking for what I call crisis gold. Mm-hmm. You can buy a paper gold, let's say, which gives you price exposure. But if you have a crisis hitting, hyperinflation, financial Armageddon, so to speak, that paper gold might not be worth anything. And so they want to have the physical. And the reason why Singapore is such a good location, along with Switzerland, is that it's essentially 3 factors. A lot of people are worried about a currency crisis in the US dollar. The US dollar is only backed by trust. If that trust is eroded, you destroy much of the existing financial system. And in such a scenario, where do you keep your gold? Well, Singapore is great because A, it's rich. Mm-hmm. The pension system and everything is funded. So it's very unlikely that Singapore would need to nationalize gold in a way that some countries might have to in the future. Mm-hmm. Secondly, the source of wealth of Singapore is coming from the confidence Singapore generated towards foreign investors who came in with investments and so on. So nationalizing gold or otherwise betraying trust of foreign investors is like committing suicide for Singapore. So Singapore would not do that. Mm-hmm. And we are aware of that in Singapore. And then thirdly, Singapore is very well defended militarily. And I think the combination of these things makes Singapore a good location long-term to store your wealth. In addition to that, Singapore doesn't really have big enemies. It is a neutral country. It is well respected. So what's not to like?
Very interesting. Well, with such increased interest in storing bullion in this little red dot, and with some, viewing the island state as the Switzerland of Asia, has Singapore's appeal overtaken traditional safe havens like Switzerland?
I would say, traditionally, I want to look at 3 areas where gold usually would be stored traditionally. We have Switzerland, we have London and New York. And I would say London and New York increasingly there's this worry that the debt situation, other issues might not make it as ideal anymore. There was Hong Kong, but now with Hong Kong largely being under Chinese controls and laws being changed, people aren't feeling that confidence, coming from the West at least. And that essentially leaves Singapore and Switzerland. And you will find that many clients like to store a little bit of gold in both locations. And what's interesting to note, though, is they would not want to store in both locations with one company. So want to store with a company that operates exclusively in Singapore and one that it operates exclusively in Switzerland as a way of diversifying your risk. And, the Navy SEALs, they have a saying, 2 is 1, 1 is none. So that's a little bit the idea where just in case, it's good to have a little bit of gold here and a little bit of gold there.
Right. Well, according to industry watchers, a growing sense of unease is driving the surge. How are, rising political uncertainties in the U.S., including Trump affecting wealth protection strategies globally? Do you think fears around possible U.S. sanctions, capital controls, or institutional instability are influencing the ultra-wealthy to move assets out and into Singapore?
Oh, definitely. I mean, there have always been some people which were worried about these things, and they wanted to have physical gold, not an ETF, not a paper version. But there was always a small number of people. And increasingly, as we're working with private banks and so on, they're telling us that there are more individuals that don't want to buy, let's say, the GLD with gold stored in the United States. They want the gold to be physically in Singapore. And that's changing the landscape of the private wealth a little bit, where more custom physical locations, locals are needed. And that's really a big trend right now.
Okay. Well, the trend of the ultra-rich to increasingly park their gold in some ways kind of signal that more of the wealthy are choosing physical gold over ETFs or digital gold products. Am I right to assume that, Gregor?
Well, I think there are two factors at play. One of it is that more people are starting to be interested in gold or silver.
Okay.
And the proportion of people which are going into physical is growing. But the demand for digital gold or gold ETFs can still go up because overall there's only a very small proportion of people which actually have gold in any form, whether it's paper and gold. And as that growing, I think there's space for both of these entities to grow. But the physical gold market, because it's so small, it can grow a lot faster, basically.
Right. So why are people, choosing physical gold then? What benefits do physical gold hold, especially in today's environment? Or rather, what risks are they trying to eliminate here?
Well, your first risk is counterparty. In other words, when you're buying a kind of paper gold, you're essentially buying an IOU. And if your counterparty were to go bankrupt, or if the counterparty of the counterparty were to go bankrupt, or the exchange on which they're trading were to go bankrupt, then suddenly you might lose that gold position, or it might be paid out to you in cash. And usually you're never able to get the physical gold. So if you have a crisis, you really cannot get that physical. So counterparty risk is maybe the biggest factor. The next factor is systemic risk and jurisdictional risk. If something happens to the financial system as a whole, or if the US dollar, for example, were to have a currency crisis or capital controls, can you still get that gold? There's so many things that can go wrong. But if you physically own that gold or you hold it, well, then it's much harder to take it away. Right. And so if you look at portfolio theory, usually people say, well, put 40% into stocks, 60% into bonds. As you get older, put more into bonds and so on. But what we are saying is put some of your asset outside of the system as a whole as a backup. And increasingly more and more people are thinking this way.
Okay. Then what portion of an ultra-wealthy investor's portfolio typically goes into physical gold today? And is that allocation, rising amid geopolitical and financial volatility?
Well, so some statistics which said that by the end of the 1970s, so early 1980s, we had gone through a decade of stagflation, basically. About 8% of U.S. assets were invested in some form of gold or silver. Today's latest statistic I saw puts it around 0.5%. So really, if you go to a difficult sort of period, which I think where we're heading to, you can probably see a big increase in this. Now, when it comes to individual investors, everybody's a little bit different. Some people are putting 60, 70, 80% into physical gold and silver. Some people might be happy with 5%. But what I do see is that as people get less certain about what's happening in the world, there's definitely an increase towards better be on the safe side, especially as these investors are seeing central banks and other entities buying a lot of gold as well, which then reinforces that trend.
Interesting. Well, then in what ways is physical gold being used as an inflation hedge, currency hedge, or geopolitical hedge within, ultra-wealthy portfolios?
Well, you have to remember that we are measuring gold usually in US dollars or some other currency. And oftentimes the question is gold really going up or is the currency, falling?
Yeah.
And if you look at the performance of gold the year 2000, it went up an average of 10.7% per year. So gold has been performing extremely well.
Right.
And you will find that historically when you're entering a period of turbulence, it will tend to do even better. So we expect gold to keep on going up higher, just driven by the fact that the US dollar and other currencies, as more and more is being printed, it will basically drive that gold up.
Okay. Then overall, Gregor, does the growing preference for storing gold in Singapore reflect a larger shift in how the ultra-rich view financial and geopolitical risks?
Yes, I think that the number of people which are starting to look into physical simply reflects unease. Because if you're looking, my native Germany, for example, we are being told our pension system is going to go bankrupt in 5 to 6 years. You tend to get worried about the future. Our electrical power is becoming more and more expensive because we removed the power stations. You see, so if you're living in these countries, you're looking at the future and you get more and more worried. And so it's only natural for you to start saying, let me put a little bit aside for that rainy decade which might be coming.
All right. Well, so what can other investors then learn from the shifting dynamics of the ultra-wealthy and how they view their gold assets?
I think education is the most important part. I'm a very big fan of Ray Dalio. I highly recommend people to start reading about the 6 stages of empire rise and decline, for example, and how really history tends to repeat itself. So every 100 years or so, we tend to have a change in reserve currency. And if you're on the right side of this wealth transfer, it can work out very well for you, or it can really hit you hard. And I think now is the time to really learn about some of these monetary policy things. Authors like Ray Dalio, again, it's going to be an eye-opener. And usually people who buy gold, have gone through this process of opening that Pandora's box.
Right. Well, thank you so much, Gregor, for your time and your insights today.
Thank you.
Thank you. That was Gregor Gregersen, founder of Silver Bullion Group. This has been The Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.